Welcome to Sterling Insights, Stand Out and Supercharge Your Assets, the go-to podcast for financial advisors aiming to grow their assets under management, stand out in a crowded market, and retain assets nearly forever. Are you advising high net worth clients who own appreciated capital assets? Do you want to help them sell without losing a quarter, a third, or even more of their hard-earned profits to capital gains taxes? Then this podcast is tailored for you. Each episode brings you the latest strategies and expert advice from leading financial advisors, seasoned attorneys, and experienced CPAs. Learn how to maximize your clients' wealth, minimize their taxes, and supercharge your advisory practice with actionable insights. Join us on Sterling Insights, Stand Out and Supercharge Your Assets, where you'll gain the knowledge and tools to set yourself apart and achieve unparalleled success in wealth management. Subscribe now and empower your practice for a brighter, more prosperous future.
Welcome to the Sterling Insights Supercharge Your Assets podcast. This is Charles Trakas, guest host, here with Omar Garcia, founder and CEO of Secure Plus Financial. How you doing today, Omar?
Hey, Charles. I'm doing great. Yourself? How you doing?
Great. Thank you. I want to thank you for coming on today.
Of course, it's my pleasure.
Today I want to hear about you. You're doing a lot of great things down there in Brownsville, Texas. I like to just begin by saying, tell the audience who you help, what do you do with Secure Plus Financial?
Absolutely. Yeah, so once again, my name is Omar Garcia. My friends call me OG, jokingly, but it kind of sticked. And so that's kind of what everyone calls me now.
OG.
And so OG, yeah. So I'm CEO and founder of Secure Plus Financial, which I started this about 10 years ago or so. When I originally started, I actually started in the wealth management, also as an investment advisor representative. But a good buddy of mine, probably like a year in or two, he was having struggles with getting some financing for his company because his financials were all out of whack. And so he's like, hey, can you help me with this? And I'm like, of course you can. So I took a look at his financials, noticed everything was completely out of whack, and decided, you know what, I'm going to take on this case. I'm going to help you put all the books in order, make sure that your financial statements are structured correctly, that your P&L, your balance sheet, your cash flow looks good and reflects the financial situation of your company, and so that we can submit this to the bank and you can get the financing. For me, it was a very profound moment because when we structured everything correctly and it actually represented what was going on in the company, he was able to go back to the bank and acquired an SBA loan. It was about $3 million or so. And what it allowed him to do is simply take all his debts, amortize them over a 10-year period. And what that did, essentially, it took him from being break even every single month from a cash flow perspective to restructuring that over 10 years and being able to do about $130,000 of positive cash flow every single month. And for me, it was a very pivotal moment because I realized, man, I think I'm in the wrong business here, because though as an advisor representative, we're looking at all the macroeconomic aspects of what's going on, right? Like thinking about portfolios and risk management. This really allowed me to take a step back and go back to the fundamentals about microeconomics, right? Like thinking about a business as a whole, thinking about strategy, what do financials need to look like, and what are the changes that you can make that are going to create massive impact in the business. And that's exactly what we did. So we structured that, helped them acquire the financing, restructured his debt, and maximize his cash flow. So he was cash flow positive about $130,000 a month, and so that's over $1 million. $1.5 million of positive cash flow every single year. And so for me, that was a game-changing moment when I realized, what I need to be doing is I need to be working with small business owners that don't have all the financial situation in order, that need clarity, that need to structure the financials correctly to give them actionable information, take this and then allow them to be able to take the next step. And so that's kind of the beginning stages of Secure Plus Financial.
Great story. You found your stepping stone. Not everyone is lucky enough. The
Yeah.
client, I have two questions, honestly. What did the client say? I mean, they had to be, just, hey, who else can I introduce you to? To take someone's books like that and turn it into a profit. And what did it mean to you to help them?
Yeah. So for me, it was absolutely both inspirational and just obviously brought a lot of great joy and meaning into the work that we do, right? Because oftentimes we're working day to day and punching a clock to like try to generate some revenues. But for me, this was very meaningful and it allowed me to think about business in a completely different level. Like, what if you could work extremely hard every single day, make really good money, and then also have a lot of meaning in the work that you do because you know that the outcome of what you're trying to do is going to impact the people that you work for. And so it also creates a lot of, as you can imagine, a lot of very positive relationships. And so client friend was very ecstatic, and I ended up getting a few more referrals, and that kind of just took me to the next step, right? Allowed me to get the experience that I needed to put that together and then showcase that as an accomplishment, as a win, and say, hey, here's what I've been able to do in the past. And here's based on what you're showing me, I think I might be able to put you on a similar path as well. And so that that was the result of that. And then 10 years later, let's say we're here now working with a lot more business owners with a lot more accomplishments under our belt. The majority of wins, of course, no business is perfect, and sometimes you don't always have wins. But I would say the majority of wins built up an amazing team with absolutely amazing core values. And I took that experience to give me the foundation of what is what should work look like, and how do we subscribe meaning to the work that we do, as well as work with purpose. And so I've brought in some of these core values into the company, and I believe it's what has allowed me to get to the next level, let's say.
And what are those core values?
Yeah, so that's a great question. So we have six core values: accountability, transparency, value alignment, results oriented, inspirational, discipline, accountable, transparent, value aligned, and results oriented are six core values. These are absolutely fundamental. For me, it's very hard to be able to grow and scale an organization unless there is a common set of values within an organization. Because with each team member, you're never going to always see eye to eye on everything, but there has to be a foundational base in which, when there may be disagreements, that we can always go back and reflect and say, hey, are we operating here based on our values, or are we steering away from our core values? And so when there has to be decisions that are very tough, like any business owner on a day-to-day or at any period has to make very difficult decisions. And sometimes these decisions might have trade-offs. And so for us, it's always been a lot easier because it's like, okay, as when making these decisions, are they aligned with our core values? Are we operating within our core values? And if the answer is no, then we decide against that decision. Or if the answer is yes, then we move forward with that decision. And so these core values also serve as the basis for the relationship that I have with each and every single team member that I have, as well as the ideal relationship with any client as well.
Omar, that sounds very important to you with those core values. How often do you review them with your team members?
Yeah, so every morning I run a remote operation, right? And so every morning we have something called wins and priorities, where we do a quick 20-minute huddle, and everyone gets to discuss about what wins they had the prior day and what are the priorities for this specific day. And we have on the screen like, hey, our six core values. And so it's something that we aren't like saying, hey, these are our six core values. It's just something that we have there in the background as a kind of what would you say, as a basis for all the conversations.
Sure. Guideline, reminder. Yep. To
Yeah,
keep, because like you said, everyone doesn't agree. So it's good the whole team understands where we're going overall. As I was looking at your website and I came across a couple things, please explain the three P's.
of course. Yeah. So the three P's is not, well, it's a framework that I have when thinking about holistically in a business, people, process, product. And so depending on the size of the business, generally we work with seven-figure revenue business owners. The way that we think about it is people, process, product. Who are the people that are working within the organization? what are the specific processes that they're following in order to be able to deliver the product or the service that the business is there to provide. And so we think about it this way because I believe that business is a people's game. So the first thing you really want to look at in a established business that's doing 7 figures plus is you want to look at the people who are responsible for the results, because the people can be the thing that takes you to the next level or could be the thing that's detrimental to your business. And so one bad apple can rot the rest, as they say. And so I really like to look at the people. Do we have enough people, or are we overstaffed as well? And so, and what are their responsibilities and what are the results that they've been generating? And so we focus there, and then we help establish internal KPIs, both mostly financial, but then also operationally as well, because one of our core values is accountability. And so the question that we often hear is like, well, how do I make sure, like, how do you even keep a team member accountable? And it's not based on your gut feeling. It's based on, are they doing okay, or at that specific period in time? What you want to do is you want to have accountability in a way where you're able to measure that. And so that you're not bringing in your own biases and say, okay, this person is responsible for X. So if he's responsible for X, what are the measurable things that we can account for that's going to determine if whether or not this person is being successful in the organization or not successful? And so one of our other core values is transparency, right? So if you want accountability and transparency, there has to be a method in which you are able to measure performance, where it's clear, concise, and that they know exactly what is expected of them. And so all this to be said is, this is kind of how I rethought the idea of the 3Ps. It's in back in college, you learn about the 3Ps in management, but I really took a step back and really thought this back through with the 3Ps, and then how do I relate this from a financial management perspective? My background is in accounting, though I did study some accounting. My background really is in finance. And so I thought, how do I take a step back and think through the management aspect and then think finance and put these together? And this is where we put together the 3Ps as a foundation, a framework, and then together with that, incorporating what are the financial and operational metrics that we're going to be using to determine our success or the lack thereof, and then go back and be able to have accountability, have transparency, and through those things, have alignment within the organization.
Very impressive. We always want to know who is, we all have a niche, who's the ideal client that Secure Plus Financial likes to work with?
Yeah, that's a great question. So pretty much what I come from small business, and my family has been in the insurance space. And so since I could work, basically 15 years of age, I had been working with my family in insurance agency. And so I did that for a long time and went to college and everything. And once I graduated, I started doing my own thing. And that's why, for me, a natural step was in the investment advisory world, because it's so related to insurance, and oftentimes they go hand in hand. So my ideal client, to answer your question, is we've been working with insurance agencies who are 7 figures plus. And what we do is we help solve a few problems, 3 or 4 problems, that creates huge impact in their business. The first thing that we do is, of course, we do an analysis. And one of the first things that we determine is what their goals are. And most of the people that we work with want to do one of 2 things. Number one is they're younger and they want to grow exponentially, or the other is maybe they're more on the tail end of their career and they're thinking about strategically exiting the business. And so for those that want to grow and scale, what we do is we do an analysis for them and figure out, okay, what is the proper systems that you need to have in place that allow you to measure your success and be able to grow. And on the tail end, for those that want to retire, is how do you make your agency in a way where you get the most value for your business, the most bang for your buck? And we look at the 3Ps. Do we have the right people in place? How do we assess risk so that we can minimize it to the degree that we can, so that when we present this to a potential buyer, we can get the best value. And so the higher the risk, the lower you're going to get, lower value you're going to get, the lower the risk, the higher value you're going to get. And so that relationship is very clear in there. And so what we help do is create the frameworks for them and the structures in place so that they can minimize risk and get the most value for their agency. On the
Go ahead.
Yeah, go ahead.
No, I was going to say, it sounds like you're doing succession, exit, and transitioning. You're taking them
Yes,
from I'm cleaning it up, or I'm getting them in the middle, or I'm getting them towards the end. It's like you're getting them in all different stages, and you're able, because a lot of times it's not everything always goes right. You know what I mean?
exactly.
Tell me a story that one went wrong. Give me a case or something that might have went wrong, not necessarily your fault, just went wrong.
I don't have, like, I guess, a specific case where things went wrong necessarily, but what I would say in general is that with whatever firm that you work with, no organization is perfect. And so what I tell people is that we're not going to hit about 1,000. And so sometimes we can miss. But what we try to do is have procedures, standard operating procedures in place, frameworks, and things that we can rely on so that we can go through this process and minimize the risk of making a mistake, whether that may be understating or overstating income, let's say for tax purposes, maybe having the wrong data set that is giving us a misinterpretation of our financial situation. And so not everything necessarily is on us. A lot of times we have to rely with the people that we work with to provide us data. And so if that data isn't necessarily good, then it's going to provide us bad information. And so that's happened in the past where, maybe we've worked with their internal bookkeepers, or maybe they provided us bad data. And so then we generate a result and they're like, hey, this doesn't seem right. And I'm like, hey, you're probably right on this. So let's go through that and figure out where in the process, the ABCD process that we have here, we might have gotten wrong. And so that's happened in the past. And so what we try to do is, again, follow very rigorously our process and see to where we can rework that and continue this process to try to minimize the risk of I guess, making a mistake over time.
Yeah, like most businesses and people establishing a great service like yours, yeah, you learn from it. And that's why you have the three Ps, your core values. But you were talking about something, you do track their performance, and you mentioned KPI. I don't know if the audience understands what that means. Could you give us a brief explanation of KPI
Or,
tracking?
yeah, I'd love to. Yeah, so a KPI is acronym for key performance indicator. And so what it is, it's a sort of gauge, a measurement of a particular stat in your company to allow you to determine if you're doing positive or negative. The way that you want to think about it is that, let's say when you go to the doctor and the doctor, does some blood work. And so they'll take out some blood, they'll analyze this, and then they'll give you a long summary report of, your cholesterol, your sugar level, how your kidneys are doing, how your liver is doing, how your heart is doing, et cetera, et cetera. And so what a KPI would be as a measurement. Okay, it's not necessarily the specific stat itself. Okay, your blood pressure is 120 or whatever. It's a measurement to tell you, hey, your KPI should be within this range. And if it's off, then that means that something is wrong. And we need to look at that and determine, okay, if this is outside of our range, then we need to take a look at this specifically and and look at all the micro levels of this stat and figure out what are we doing wrong and why is this indicator telling us that something is wrong. I really like KPIs because if any business owner has ever worked with like a CPA or a bookkeeper, they oftentimes provide you, your books. And so these, they'll give you the P&L and the balance sheet or the cash flow statement sometimes. And you'll look at these and a lot of times I've had situations where maybe owners are like, this is great, but how do I take this and take action on this? And what I love to do is create KPIs, because what KPIs enable you to do is take your financial statements and then allow you and help you to determine where your priority should be and what kind of actions should you be taking in order to enable you to get to whatever outcomes that you said you wanted to reach. And kind of taking just a quick step back on KPIs as well, it also opens up the conversation about goal setting, because oftentimes that I've worked with individual business owners, they have a vague sense of what they want to do in the future. It's like, hey, I want to grow. And I'm like, that's awesome, but by how much? In what time frame? Do you want to grow 1 million in a year, 10 million in a year, 100 million in 10 years? I need to understand what kind of growth you're looking for, because if you're telling me that you want to grow 1 million over the next 5 years, my advice will be different than I want to grow to $100 million over the next 5 years. The way we structure our systems is going to be different. Our legal entity structure, our accounting basis, our deductions, our election, S corp versus C corp, everything is going to be very different. And so what we help do is kind of take a step back and think through, what is our goal? Why is that important? And think through our personal, professional, and financial goals, and how do we align these goals with the objectives and the mission of this company, and synergize these two things. And what we do is we provide KPIs and financial information that is telling us if whether or not we're heading in the positive direction or we're regressing and heading towards a negative direction.
What's the frequency with the KPI tracking? Or is it coming up daily with you guys, or it just pops up and says, "Hey, here's a client that is underperforming," or tell me, the frequency and how you connect with your clients with that KPI tracking.
Yeah. So what we do on KPI tracking, we usually meet with them on a monthly basis. Typically, especially for new clients, we do 2 meetings a month. And so we have we usually have our KPI meeting somewhere mid-month, let's say maybe, the 15th, depending on their situation and when we're closing the books. Oftentimes they allow us to be able to close the books, meaning we do all the bookkeeping, the cash to accruals, and we do all their internal works, and that allows us to speed up the process. And then we have our KPI meeting, and somewhere between the 15th and the 20th. Towards the end of the month or the beginning of the following month, we have a sync-up call. And in this call, it's basically, hey, we said we were going to do 3 things in our last meeting. How are we doing with that? What's up top of mind right now? Because we take hours in prepping everything, and what our discussions are going to be. What should we be prioritizing? And what I want to know is what's top of mind, so that as I begin the planning process and setting the agenda together, I don't want to end up planning for something and spending hours on reviewing this information and putting this together, while the owner has something completely different in mind. Like, Omar, I don't really care about that right now. I just had an employee my top performing employee, who's deciding to leave. I don't know what I'm going to do. And so the idea of the sync-up call is like, tell me what's top of mind, so that as I put everything together, we can take information, extrapolate the data and information, so that it allows us to make clear, informed decisions about what is going on at that particular point in time.
Is that one of your biggest challenges, to actually get their true, here's my goals, here's really what we want? Every company has a challenge, especially if you're
Yes.
trying to grow. What is the biggest challenge there with you and your firm, or with these folks believing in the KPI, the 3 Ps, the core values? To me, it sounds
Yeah.
well engineered and systematic, that nothing should fall through the cracks listening to you. And it seems like that's how you're set up.
Yeah, that's the goal, of course, but I'll be the first one to say that we're certainly not a perfect organization, and sometimes, things don't always work exactly and perfectly the way that we envision them. Though the whole purpose of having all these systems in place is to minimize risk and maximize outcome, knowing full well that we're probably not going to hit 100%, but the closer we are, the better. And actually, speaking of, I often say the same thing about financial statements, is that you can get like 20 CPAs and have them all do your books, and then you're going to get 20 different results. And you're like, that's crazy. Why would that happen? And so it's like, okay, no set of books is ever going to be 100% perfect. But what you aim for is highest level of accuracy. And so now that begs the question, well, how do you obtain that? That's going through a process, right? Okay, the book reconciliations, the review one, then having a senior review that, and then having a CFO do an overview of KPIs and financial information. And so you have steps and procedures so that what it does, it reduces the chance of making a mistake. Knowing full well that you're never going to get to 100%, but if we get to 98, 99% level of accuracy, that gives us enough to be able to look at the financial situation of a company and with a high degree of accuracy and confidence say, here's what we need to be doing. If you're not going through this process, then very likely the accuracy of the financials is going to be much lower than that. And then when you're interpreting this information and then trying to take decisions on this, then it might not even be the right decision. It might not even be the right action because you're getting really bad information. And so it goes back to our systems and process. Again, we're certainly not perfect, but the whole reason why we have all these systems in place is to try to minimize things falling through the cracks, to try to maximize the impact that we're doing. Again, knowing full well that we might not bat 1,000.
Omar, we all work for a living. What do you like best about what you do for Secure Plus Financial?
What I love about it is a few things. Number one, of course, it really comes down to impact. That's because the way that I like to think about it is that, and what I constantly tell my team is that, look, life is very tough and you're likely going to experience some kind of tragedy in your life, if not now, at some point in your life. And the question that you want to ask yourself is, what is going to permit me to continue moving forward despite the tragedies and the setbacks that I have in my life? And generally, it's not money, because though money is very helpful and it can give you a lot of opportunities, but it has to be something greater than just the act of making money. It should be purpose-driven. It should be mission-oriented, because when you have those setbacks, then what this allows you to do is take a step back and rethink, okay, why am I doing this for? And it has to be for a greater purpose than just yourself. It has to be not only good for you, but it has to be good for you, your family, your team members, your clients, and your community. And so if you can set yourself up in a way where all of this hierarchy, let's call it, is benefiting from the business or service that you're providing, then what it does, it creates the foundation for you to establish meaning and purpose in the work that you are doing, so that when you have those days where it's like, shit, man, I just don't want to work today, or I don't want to deal with X client, I don't want to deal with issue that something's going to happen, I don't want to deal with any of that. It's taking a step back and then rethinking, though I don't want to do this, I know what I need to do because these are the results that I'm willing to get. And interestingly enough is that when you focus in outcomes, money flows to you. And so what I would say to any entrepreneur is, though obviously, and coming from a CFO, right? Like I'm thinking of everything from a financial perspective, but if you want to maximize shareholder value, return on investment, if you want to make the most money you've ever made in your life, then what you need to do is focus on outcomes. Because if you focus on really good outcomes, then the money will flow to you. It's almost guaranteed.
No, that is well said. Our audience is definitely going to want to know where to find you. What's an easy way to get a hold of Omar or Secure Plus Financial?
The easiest way is to go to secureplusfinancial.com, or you can also follow me in pretty much all social media platforms, Instagram, Facebook, TikTok, YouTube Shorts, and I'm at Omar Garcia CFO. I'm constantly providing content on these specific subject matters. It's really my passion. And if you guys want to learn more, I would definitely follow me on social media, Omar Garcia CFO, or just go to our website, secureplusfinancial.com, and you can learn everything about us.
Omar Garcia, I want to thank you very much today. I want to thank you, everyone, for watching or listening to the Sterling Insights Supercharge Your Assets podcast.
It's been great. Thank you so much, Charles.
Thank you.
Thank you for listening to another episode of Sterling Insights. Stand out and supercharge your assets, where we provide the info you need from successful leading financial advisors, lawyers, and CPAs. Your hosts, Roger and Catherine Silk, invite you to learn more about Sterling Foundation Management by visiting sterlingfoundations.com.